Bitcoin has just closed at its highest ever price. You can see that yesterday we closed this candle at over $101,000 per coin, 101,435 to be exact. Extremely exciting in my opinion. However, a lot of people might be asking themselves, is this it? Is this the all-time high? Is it time to cash out all of our gains, make a run, enjoy all of the profits that we've made so far this cycle? I'm not sure, but what we're going to do today is we're going to take a look into the data. We're going to see what the charts are telling us. We're going to take a look at a couple of different charts, look at some of the historical data. We're going to take a look at some common indicators, which might help us gauge whether we are at a permanent top for the cycle. It might be at a local top. That's a different question altogether. However, what we're going to do today is take a look and see if this is the cycle top. So taking a look at the charts just here, you can see that Bitcoin is still honoring this channel. You can see we bounced off this level a few times. We're kind of in the middle of the range. On a macro perspective, I'm expecting this week to be extremely volatile in one direction or the other. You can see that we've got the federal press conference where the Fed is going to be announcing their interest rate decision. The markets are pricing in a 25 basis point cut. The day after, we've also got GDP growth being reported as well, and personal spending month over month. So there's some extremely important calendar macroeconomic announcements to come this week. So it could go one way or the other. But taking a look at the data as to see what we're looking for whenever it comes to a cycle top. Last time, whenever Bitcoin reached its cycle top, you can see here, or the cryptocurrency market in general, you can see that Bitcoin dominance actually fell down. You can see that Bitcoin dominance versus the total market cap of crypto went from up here of around 74% all the way down to around 40%. You can see this was an absolute capitulation. This is what we have seen in the past. If we go back to the Bitcoin chart, you can see that that was at the start of 2021. If we just take ourselves back here, back to 2021, you can see that, yeah, this is exactly where we were running up from end of 2020 into Q1 and then Q3 of 2021. So that is what we are looking for from Bitcoin dominance perspective. Kind of counterintuitively, we are expecting the Bitcoin dominance of the industry to actually drop. You can see that over the past year and 2 years really, we've been grinding higher slowly but surely in the Bitcoin dominance, where Bitcoin has been gaining more and more market share versus the rest of the crypto market combined. You can see that recently, actually back in November, we dropped out of this rising wedge. We've kind of been bouncing around a little bit since then. We've come around this sort of area of, well, now is support. It used to be resistance. You can see previously we bounced around this level a lot for a long time. But now we are finding ourselves here with some supports. We've bounced out of off of the 50 EMA and are going back to retest it again. And yeah, we can see the RSI has come back out of the oversold section back into a more normal range. What we can see from that is that, yeah, we've found a floor here. We're going to have to come back down probably off of this 50 EMA and retest this floor again before we start heading down. Where am I targeting for a cycle top in terms of the cryptocurrency market? Well, if we take a look back, even back before 2021, if we go right the way back to 2018, you can see that we came down to around this sort of a level here at 36%. Following the trend line through the 40% mark, you can see now expecting somewhere around 41 to 42% dominance for Bitcoin. Again, past performance is not a predictor of future performance. However, it is a good indicator. So what I'll be looking for myself personally is for the price or the dominance of Bitcoin to come down to around this range. It might not come down perfectly, but somewhere whenever it's getting down this level, I will be looking to cash out my investments in the crypto markets personally. That is just a personal decision. Obviously, everything on this channel is just my own opinion. It's not financial advice. Cryptocurrency is risky. You can lose all of your money. You'll do your own research. You'll make your own decisions. You'll consult your own independent advisor, of course. other charts that we might look at as well, taking a look at some different indicators away from just the normal charts. You can see here, this is the Bitcoin rainbow charts. You can see that it has tracked the price of Bitcoin through different levels over the past couple of years. And you can see whenever we get to the cycle tops, we tend to get to around this, this orange into the red section of the rainbow chart. You can see that we are still firmly in the green section, which green means go in my books personally, but you can see that we still have a long way to go. The charts here, if we just take a zoom in, are forecasting a Bitcoin price of somewhere around, 180 at the low end to 250 at the mid end and 335 at the extreme. I again will be not holding out for the very top of the market myself. I'll not be trying to test my luck to try and get up to $335,000 a coin. Probably somewhere in this range between 180 and 250 will be the sweet spot for me, just to make sure that I don't try and time the market and come out of this this bull market with some sort of profits. So you can see that we gain based on this this indicator using the Bitcoin rainbow chart. You can see previously it's followed pretty well. Whenever we went into the top in 2018, you can see that we were firmly in the red zone. Again, similarly with 2021, you can see that we came up and just bounced off of the red zone here as well, before coming back down again. So if we repeat or if we rhyme with history, you can see that we expect to come up to around this range. So that's again another good indicator that I like to keep an eye on just as we run through this bull market. Another one as well is the Bitcoin RSI, the Relative Strength Index. You can see here that previously, whenever we've gone through those market tops back in 2018 and in 2021, you can see that we always had an RSI of over 90. In fact, in some instances, you can see even we had 99%. You can see here 96. It wasn't as high back in 2021. It was 93, but it was still over that 90 mark. You can see that currently the Bitcoin RSI is sitting at 78.51. Still a little bit away from that 90 mark up here. So what I will be keeping an eye out for, again, is the Bitcoin RSI heading into the 90 level. That shows us that it's at an extremely overbought region and might be due for a correction. So again, this is another popular indicator which I like to keep an eye on, which it suggests to me, based on the way that I'm reading it, the way I'm interpreting it, and based on what I can see from the previous data, we are still not at historical levels, which would indicate the top of a cycle. Another one as well is the MVRVZ score, or Z score, depending on where in the world you are. I'm in the UK, so I don't know why I said Z, but anyways, you can see that at the past, what we're looking at here is the market value versus the realized value of Bitcoin here. So it's a ratio of market value to realized value. You can see that in the past that we have come up into this red zone again, following those cycle tops back in 2013, 2018, and in 2021. We didn't quite get into the red zone here, so this is not a perfect indicator. However, it's definitely came very close to within spitting distance of the red zone. You can see the red zone starts here at an MVRVZ score of 7. So we are currently sitting at an MVRVZ score of just over 3. So again, a long way still to run on this chart if we are to expect the chart to hold in terms of being a reliable predictor of the market top. And again, if we take a look at this one, this is actually one of my favorite ones to keep an eye on. It's the Pi cycle top indicator. If you want to, you can do your own research. I'm not going to talk you through all definitions of all of these different indicators. So important for you to take the information, and the insight that's shared in this video, and to go and conduct your own research and see if you think these are valid indicators or not. However, if we take a look at every cycle top in the past, you can see that whenever we have had this 111-day slow-moving average, the sort of baby blue line cross over this pink line, the 350-day squared SMA, that has always been an indicator of the cycle top. You can see that that was the case back in 2013. We'll resize and we'll go back again to 2019. You can see whenever we crossed over here, we were at the cycle top here again as well. And yes, if we zoom in here, it did just about cross over here at the top. You can see that we did just and no more crossover on the moving averages. So we are not quite there yet. If you take a look at where we are at the moment, you can see that we're miles apart. These slow moving averages are yet to cross over. So again, if we are to consider this as a reliable indicator, in the past we would be a lot closer to overlapping at this stage if we were at or near the top of the cycle. But yeah, we have started ticking up on the 111-day slow moving average. So you can see that we have come curled round a bit and are trending in an upwards direction. So it is important to start to keep a closer eye on these indicators. So yeah, I'll be checking in on these regularly myself to make sure that yeah, as soon as these are close to overlapping, I might be considering exiting the market. Another one is the Bitcoin Fear and Greed Index. This is showing us how greedy we are as investors in the market. You never want to be around when we're in a period of sustained extreme greed, and you can see that at the moment we are in a period of extreme greed. You can see that we have been for a little while. We did correct last week with the price down to a level of just normal greed. However, I would say based on the previous chart, so this is the Fear and Greed Index over since 2018, and you can see that with previous cycle tops, we were again much higher for much longer. You can see that we were in the 90s for extreme greed back in 2020, 2021, 95 there back in February. You can see at the moment, whilst we did hit 90 very briefly in November, we are down around this range a little bit more, around the 70s to the mid 80s. So we are still in a period of greed. It is still important to be very vigilant and to not let ourselves get carried away, or whenever we feel those feelings of greed, which is only natural for us as humans, it is important to take a step back and reevaluate where we are and to make sure that we don't just get too greedy and carried away in the market. So again, because we are in a pretty high level in the Fear and Greed Index, again, it indicates to me it's time to keep a close eye on things and make sure the market doesn't get too frothy. There's not really that much of it doesn't really give us much of an insight here as to when the market might top, but you can see that in the past we have always had an altcoin season whenever there has been a market top. So you can see that right from back in 2020 or 2017, you can see here we were in a huge altcoin season up near 100%. You can see here back in 2021 we had a sustained period here back in altcoin season. Altcoin season is anything over 75 on this chart. Again, you can see that earlier on in this month in December we did cross into an altcoin season. We did come back down again, and we are kind of curling around a bit. There's a bit more of an upwards trend again, so I'll be looking for a bit more of a sustained altcoin season for this chart as well. These are a bit more subjective, these indicators. However, they are still important, I do feel, because it shows the sentiment of just the everyday person, normies, as sometimes they're referred to, people who don't have that much of an interest in the market, in the bear markets, and tend to only come around whenever there is a lot of excitement or a lot of interest in the cryptocurrency industry. Typically, again, whenever price is going up, that is when people tend to be most aware of it, whenever the Bitcoin and Ethereum, etc., are all in the news and the headlines, when they hear their friend has made 10x on a random altcoin and they want a piece of the cake. This is whenever the general public start to get involved. Taking a look here at Google Trends and Bitcoin, you can see that back in 2017 we were in a massive spike. Back again in the peak in 2021 we had a massive spike. You can see even earlier on this year when we had a rally in the markets in Q1 2024, we peaked up a little bit. We are slightly over that again. However, we are still nowhere near the search trends for Bitcoin versus where we were in the previous two cycle tops. So I would expect for this to have a little bit more room to run. But again, because we have kind of sprung up here since October, again, it does show me that we are at a fairly advanced stage in the bull market now. We're not at the early stages anymore. We are trending towards a more developed stage in the market. The last one, if it's going to let me do it, yes. So taking a look at YouTube views themselves is a good indicator based off the back, similar concept to the theory behind the Google search trends that I just shared there. So whenever people, the first thing they do, they want to go and learn about something, they'll go and they'll search and they'll stick Bitcoin into YouTube. You can see this is a very popular channel. This is Altcoin Daily. This is, you can see back 3 years ago in the previous cycle top, you can see they had 300,000, 250,000 views regularly, minimum around like 120, apart from the odd anomaly, at least 100,000 views on their videos. I actually saw, when I was scrolling through earlier, I saw one around 700,000 as well. So they even managed to get up that high during the previous cycle top. However, if we come back to today and more recent times, you can see that yeah, we were around 14, 12,000, 59,000, 87,000 a few months ago, 5 months ago, and more recently, 3 weeks ago, we're still 20,000, 80,000, some getting over 100,000 again. So there are, again, the views are trending upwards. It does show me that people are taking more of an interest in the market. There are more retail investors or normies involved and doing their research. But yeah, we're still nowhere near. It is one of the biggest channels, if not the biggest channel on crypto YouTube, and yeah, they're still miles away from getting the same views as they were back in the peaks of the 2021 bull cycle. So for me, I've taken a look at all of those different indicators. I'm trying to avoid confirmation bias. I'm trying to avoid looking for indicators which tell me what I want to hear and tell me I want my bags to continue to run. I still want to make some more money out of this market. So I'm trying to avoid that. I'm trying to take an as objective opinion as possible. However, because of a lot of those indicators overlapping and suggesting to me that we are not quite at a cycle top yet based on the data from historic cycles, I am going to hold on a little bit longer personally to my bags and hope that the prices run up a little bit more with that. But again, you'll make your own decisions. You'll do what's right for you. Where might we be going then in terms of where might we be aiming for in terms of a cycle top? I'm going to use Fibonacci retracement again just to give a bit of an estimate of where we might, some ranges where we might find ourselves at the top of a bull cycle. So I'm going to start at the low of the bear market. I'm going to come up to a recent high before we dipped back down again to around here. You can see that this is quite interesting. You can see we've been bouncing around this this range of the 0.786 Fibonacci retracement, and we are on our way to the one, which is around $107,000 per coin. In terms of where we might go beyond that, we're kind of in and around this range. So at a bear case, if we broke out through this this one level, the 1.618 is around $143,000 per coin, up to 200,000 for a mid case, and then a bull case we're around $259,000, $260,000 per coin. So these are some very common levels that we tend to see in these bull cycles. So yeah, I will be keeping a keen eye on these different levels to see what price is doing and what the indicators are telling me whenever we are around each of these different levels. In terms of the others chart, the total cryptocurrency market cap excluding the top 10 coins, we're going to do the exact same thing. You can see as well, actually, this is a fascinating chart. You can see that we've been broken out of this descending channel from the cup pattern. We exploded up, came back, tested this price action level, and we are coming back down for another test before we head back towards all-time highs. But hopefully, if we break out of that, where might we see ourselves? So again, we're going to start off here at the lows of the bear market, come up to the recent high before coming back to the last pull down. You can see again such a fascinating chart here. Before we look at it, I'm going to zoom in a little bit and see where we find ourselves. So you can see that once we broke out of this level, we hit the 1 on the Fibonacci. Well, we were at the 1 on the Fibonacci retracement. We came back down and hit the 0.618 pretty much perfectly, which is also in this price action zone, which takes us up again perfectly to the 0.786 level. And yeah, that's where we're coming back down to retest now as well. So this is an absolutely fascinating chart here. So again, if we take a look at where we might see ourselves in terms of a market cap for the cryptocurrency market, excluding the top 10 coins, we're going to look at the same levels as before. So assuming we break back out past this recent high, the 1.618 level, we are at a $625 billion market cap. at a kind of what would be a bear case. A mid case, we would find ourselves around 915 billion, and again at a bull case, we might find ourselves at a $1.2 trillion market cap. If we really got carried away, if things got really silly, really overheated, we might find ourselves at a $1.4 trillion market cap, or 1.39. So again, assuming that we can break out of these levels, we've got some pretty interesting price discovery to go through from that point. So I will certainly be keeping a keen eye on the markets, on the trends over the next couple of weeks. There might be some pullbacks along the way. There might be some nice green days along the way. It'll be an interesting time. You can see that, yeah, on the current chart, we are in a bit of a down. Well, I suppose this is a bit of a bull flag actually. You can see that we've run up here and we're coming back down in this channel. Back up to test this level, so that is maybe perhaps even a double bottom just there. You can see we've hit this level and we've now come back and retested it and rebounded quite strongly. We might see ourselves pushing up on here in the short term. So that's it for today. Thank you so much for watching. If you've learned anything, I would love it if you could leave a like, please. If you would like to subscribe, it would make me incredibly happy. If you want me to cover anything in particular, any narratives, any coins, any thoughts, any indicators, leave a comment. Let me know what you thought of today. And yeah, I might, if you leave a comment with a suggestion for a video, I might take it up in a video sometime soon. That's it for now. Thank you so much for watching. Have a great day.